basically, we want to buy shares. Okay, please listen now here. Now, whenever we are investing in shares, we want to know which share is the cheapest and the best. Okay? Fine. So Kerala से वापस आ गए? So good. Great. आइए. So we want to know, please focus here. करें शुरू? Should we start? So please focus, very important, okay? So don't talk to each other. We are starting now. So the file which is on your screen, if I've just given it on your WhatsApp this thing. So you just blank it. So we are going to fill the data again. Okay, fine. So whenever we invest in stocks, we want to know which is the cheapest stock and which is likely to grow further and give you a very good return, either for investment or for the purpose of mergers and acquisitions. This process is being used to identify the companies which are today selling at what valuation they are trading at. Okay, so what we have to do is basically you have to choose an industry. Okay, any industry. So what I have chosen, automobile. So after we do, you can individually choose any industry, like insurance, banking, or automobile or pharmaceutical, whatever. Fine. So you pick up all the companies. We believe generally that all these companies are similar in nature. They are offering similar products and should be trading at a similar valuations. Okay, but this whole concept has a issue. It's not a very, very, very good, kind of a thinking, because all the companies may differ. Fine. So it's not that these companies can be, considered as of having a similar kind of, valuation matrix. So there can be differences among companies. Fine. One is pharmaceutical company, which is into some different products. Some is in different product. Like, we talk about, paint industry. But Asian Paint is basically selling, paints for households. Okay. So there is another company in paints, which is selling paint to all the industrial, like Maruti and other industrial companies. So all the companies have different products and they sell to different kind of clientele. Okay. So there are some kind of similarity that they are in paint industry, but the similarity ends there, and thereafter the companies have their own businesses. Okay. So since this is only the best way of moving forward, to look for companies in similar industry, to how to gauge how they have been valued. Fine. Unless you should have actually companies which are similar in terms of valuation, in terms of sales, in terms of profitability, in terms of capacity utilization. If you choose that company, there will be a meaningful comparison. But it is very difficult to get such kind of a companies, and you have to identify. Of course, you can get it. For example, HDFC and Reliance Industries, they are in different businesses, but they are huge companies in India. So we can always compare them in terms of how they are valued. So that would be a better way of comparing them. But when you are comparing all the auto companies, it may not be that you are comparing those apple to apple. Okay, but still you started with all the automobile companies. Okay, you are saying that all the companies are doing same business. At least that similarity is there. So what we did was, we choose companies. Okay, like I went to screener. So I started with, recording kar diye. So I have chosen all the automobile industries. Right, so you can go to the peer group and you have all the companies here. TVS, Hero Motocorp, is all these things. Okay, but sometimes all the companies are not listed. So what I have chosen is Aisha. Okay, find the first company. Okay, now this Excel sheet I'm using, I've given the format last time, but this was done by some of the student here last year. Fine. So she has chosen all these companies as automobile companies: Aisha, Maruti, Tata Motors, Mahindra, and Ashok Leyland. They're all in autos. Okay. Fine. Like Maruti Suzuki is basically in passenger cars, and Ashok Leyland is basically trucks, and all these things. So even when we are comparing companies, they have different businesses. Okay, fine, but it's okay. ठीक है, चलो बैठ जाइए आप. जस्ट ओपन दिस फाइल, ओके, विच आई हैव जस्ट शेयर्ड ऑन द व्हाट्सएप ग्रुप. ओके, फाइन. व्हाट्सएप के आज उसमें आपके उसमें आया हुआ है, एक वैल्यूएशन करके फाइल है. ओके, फाइन. So I start with the first company, which is iShare. So in iShare, what we do, we just go to iShare. The exercise is very simple. We have to just put the number here from the screener. The price is what? 3446. Okay, look at this. This is the price, 3446. Okay, this is the latest price. So we will put the number here, 3446. Is that okay? The price. Then we go and put market cap. Fine. So market cap is, we again pick the number from there. Market cap is 94,344. It's better to, put the number, hard code number instead of, copy paste. Otherwise, sometimes you will get wrong, calculations because it's all Excel driven sheet. So it may not pick the format. Okay. So better is that you just pick the number and put the number, manually instead of copying paste. You can always copy paste the number from there. That's a very simple exercise, but it's always better to put hard code the number, okay? Because there are not many numbers, okay? So we will be able to do it. Yeah. हाँ, सारे sheet में उसको blank कर दो, okay? And then start putting it. Okay. In the morning, I just put the numbers again because this was the last year numbers. Some girl in the class here in this FIV had put the number, so I've just blanked it. I just put the new numbers, which is coming from the latest listing. Okay. But the numbers can change, because the market is open now. So the share price and market cap keeps changing. Then enterprise value. Enterprise value, if you go to the screener, you will get the enterprise. So if you don't have the enterprise value, go to the add ratio table and go for enterprise value. This is 93,775. Okay. 93,775. 93,775. Okay. Fine. So, what is enterprise value? I told last time it is the market cap plus the market value of the debt minus cash. Okay. So you can just even check that. Fine. If you check that, you will find that the number is the same. Suppose we have not put it to the screener, so you can put the market cap, add the value of the debt, and minus the cash. Okay. So I'll just do it for one, then you can just this thing, okay? Like suppose you go to market cap first, look at the market cap, it is 94,000. So I'm just invoking my calculator here. So 94,344. Okay. Plus debt. Debt is how much? That is borrowings is 288, isn't it? Plus 288. Okay. Fine. 94,642 minus cash. So we go to the balance sheet, go to other assets, and cash equivalents is how much? 857. So minus 857. So we get 93,775. Are you getting this number? Okay. Now, normally in 99% times you will get the enterprise value absolutely right if you do, by doing so. But in sometimes the value may be different than what we have got it by this formula. Because the formula doesn't end up here. The formula has certain more adjustments to be made. Okay. Fine. So we need to add the minority value, okay, of the shareholders. So, but since we are not doing it, I'll just talk about that a little later. So the enterprise value needs to be changed a little bit. Okay, the formula has one more leg which we have not discussed. EV is basically, what is the meaning of EV? Hanji? EV is basically, if we have to look from the conceptual angle, EV is the market value of all the operating assets of the company. Market value of all the assets which the company owns, all the assets which are used for producing goods and services, operational assets. Okay, fine. So it means that today, if the company somebody has to buy, the company has the other person has to pay this much amount. Okay, both debt, because I suppose I have to buy this company, I'll be paying market cap by taking all the 100% stake, plus the loan will become my baby. So in fact, from my pocket, all that amount is going to acquire all the assets of the company. Okay, but we reduce the cash because that cash is not used for operations, it is sitting idle. Okay, that is not been participating in doing business, so that is invested somewhere in producing some kind of interest income or something kind of. So we reduce that. So we want to know what are the operating assets I'm going to inherit. Suppose I'm buying a company, how much assets I may be getting by acquiring 100% of that company. The cash is irrelevant because that is an excess cash which I'll be getting. So I'll minus that. So that will be the net value to me when I buy that company. Okay, because cash I'll be getting in my pocket or in my bank account. So that's why I reduce cash. Fine. Is that okay? Because the market cap, I mean, the share values have grown because the company has a lot of cash also. That can be one of the reasons the company has 10,000 crores of cash in their balance sheet. So company will not be less than 10,000 crores when you go to the market to buy. You have to buy at least 10,000 crores. Even the company has zero value. Company is sitting with cash. Okay. So market cap actually factors in the cash also which the company has. So market cap is inclusive of the cash also. That's why I reduce it, because for us, what assets I'm going to buy, which are going to be helpful for me to doing business. Okay. Fine. Is that concept clear? Okay. So this way you can do it for all, but otherwise you can just add this information. Okay, so let's say 9775 it was. Yeah, 93,000 exactly matching. Normally it is, sometimes there is always a gap. Okay, we'll explain that gap later. So what we do is we just pick up this number. Okay, so EV again. So these are basically, the first is the price of the share of the company. Second is the market cap. The third is called the enterprise value. Okay, fine. Now we put some data, top line data, okay, like sales. So we go to the sales, go to the profit loss account, take the TTM sales, okay, 15,000, the last 12 months number of sales. It is 15,031, okay, 15,031. Because I am taking a decision to buy the company or to know how the company is today being valued. So I must have the latest numbers, last 12 month number. On the basis I am going to value. If I take, the March 31st number of sales, that number has gone now. So we are in the month of now October. So why do we take an old number? Is that okay? Sales aa gaya. Then EBITDA. EBITDA. Okay. So what we do is basically we go to the, the profit loss account and go to the operating profit. Now operating profit here, which is 3633. So I have assumed that it is EBITDA. Okay. There can be some minor here and there, but this is 99.9% EBITDA only. Okay. This is your sales minus expenses. So all the expenses which the company has done, sales minus expenses. So it comes to EBITDA. Earning before depreciation, interest and taxation. If you look at the interest, depreciation and tax are coming below. Okay. So this is EBITDA. How much it is? 11,998. Sorry. 3636. Okay. So I've just looked at the wrong number. 3633. Okay. 36. Okay. 3633. Okay. Is that okay? EBITDA. Then we go to EBIT. EBIT is earning before tax. Okay. Sorry. Oh, I beg your pardon. Okay. I'm just again revisiting. I'm just leaving it here and go back to calculate EBITDA. Okay. हाँ तो ये ठीक था 3633. This was right number. Okay. Sorry. 3633. Now we go to EBIT. So EBIT is basically EBIT would be this 4219 plus interest plus 33. Yeah, absolutely. So we do is that we calculate. So इसमें 33 ऐड करना है ना हमने, इसी में 33 ऐड करना है. So it is 336. Sorry, I'm doing one thing. Oh, sorry. So just follow me what I'm doing. Okay, it is 4219 profit plus 33. Okay, fine. Is that okay? Profit before tax plus interest. Is that okay? Will be profit before interest and tax. So 4219. What is the number? 4219 plus 33. Okay, fine. ये 4252 आ गया. Just put this number. Put this number. So what I'm doing is I'm adding depreciation also to it now, which is 553, 552. Okay. हाँ कितना आया था एक सेकेंड नंबर कितना आया 4252 okay fine so I'm just putting the number here Abid and what I'm doing is I'm just going back I'm making small correction okay I'm making a small correction I'm just taking this number again 4219 plus 33 okay plus the depreciation है ना depreciation कितना है 552 just hold on EBITDA निकाल रहा हूँ absolutely EBITDA is 4804 okay so just make a correction there that's why I was thinking that I was doing something wrong how much 4804 48404 so what's the difference here is what we have done is basically we have taken the operating profit then of course there are other income also 11771 which has been added okay so if you take 3633 then other income if you include we'll get the same number isn't it fine but now if you look at the other income it has some exceptional items and some other normal items okay so normally the normal should be included exceptional should be excluded fine भाई जो normal income है वो part of EBITDA है company is making profit out of that okay that is a real profit of the company but exceptional items are basically which occur only I mean every year it will not occur okay like suppose the company has downsized its business and reduce its employees by 100 people so they have paid some retirement benefits to them some huge amount of money which the company is not going to pay in future so exceptional items should be excluded from our analysis because exceptional things may come only every year it may not be there okay it may be there but in different nature but we should normally exclude the exceptional items like suppose if there was an earthquake and there was some kind of some asset was destroyed so that will come in extraordinary kind of this thing so there are exceptional and extraordinary kind of losses or gains so they should be all excluded from analyzing the company's valuation because company valuation will not change for example if company has got huge amount of money by selling a vacant land some 500 crores it has boosted the profit of the company in that year it is not going to boost the profit in the coming years okay and so we are excluding that is that okay is that clear so now we go back to our calculation okay is that okay now we go to earnings so earning will be putting the PAT which is profit after tax how much is the profit out 3222 okay is that okay fine then all the actually what we are supposed to do was you have to delete only the financial data and market data बाकी formulas भी हट गए हैं वहां से anyway we will be still we can enter the formulas no problem so ये information डाल दिया okay now we go to the first now this is the basic data okay on this base data we will find out what is the valuation of the company so first is price to sales So price to sales is basically we take the market cap here, not the price. Market cap divided by sales. Fine. So price is what? Price is the total price, the market cap of the company, not the price per share. Okay. So price means market cap here, not the price at which the share price is trading. So which means the company is trading 6.28 times than what sale it is doing. Okay, fine. So we'll compare the other company, at what price they are trading to find out which company is cheaper, which is, this thing. So soon we'll come to that. Okay. So EV to sales. Okay. So what we do is just let's complete, Maruti Suzuki. It is that it means, the total value of the company in terms of shares is how much? 94,000. Company sales is how much? 15,000. Okay. Company sales is 15,000. So which means whatever company sale is doing, company is valued 6 times than what sales is doing. Is that okay? कंपनी अपनी सेल से कितने गुना पे ऊपर ट्रेड कर रही है, कितने ऊपर चल रही है, उस टाइम कितने महंगी है वो कंपनी. Like suppose I say the company's sale is 100 crores, okay, and the company's earning is say 50 crores. So what will be the price to sales? 2. Okay. So when we compare this company with this company, which is cheaper, the 2-1, okay. अगर एक कंपनी है जिसकी 100 करोड़ की सेल्स है, ओके, सॉरी 100 करोड़ का मार्केट कैप है और सेल्स सिर्फ 50 करोड़ है, so price to sales will come 2. Fine. So it is trading 2 times than what turnover it is doing. Okay. But this company is trading at 6 times than what turnover it is doing. So which company is more expensive? This company is expensive. ये कंपनी महंगी है ना. अगर suppose, just listen, you are Anand and what's your name? Huh? Manas. Now you are both running a company. Now you are doing a turnover 100 crores and Anand is doing a turnover of 50 crores. Both companies share today the market cap is 100 crores. Which company are going to invest? His company or this company? 100 crores with 100 market cap divided by sales of 100. So price to sales is 1. His company is selling at 100 crores but doing only sales of 50 crores. So his company is trading 2 times than what sales is doing. Okay, fine. So his company is very expensive. अगर आपने सस्ती कंपनी खरीदनी है, दोनों कंपनी का एक जैसा ही आगे फ्यूचर है. So you are going to put, buy which company? Manas, because he's also trading at 100 crores. You are also trading at 100 crores, but you are doing half the sales of what Manas is doing. So which company is more cheaper? Manas company. If we are look at price to sales as one of the criteria of gauging a company which is cheaper and which is expensive. Is that okay? Fine. समझ में आया? अभी जब इसको कंप्लीट करेंगे आपको सारी कहानी समझ आ जाएगी. Okay. Okay. So let's now just go to EV to sales now. Let's go by this thing only. So we put EV, enterprise value divided by sales. Okay. 6.2. Okay. Then EV to EBITDA. So EV to EBITDA. EV to EBITDA. Then EV to EBIT. EV to EBIT. I'll just tell you the significance of each and every ratio here. Then price earning ratio. Here we take the market cap, okay, divided by the net income, earnings. 29.3. Is that okay? PE ratio is market cap divided by net income, the earnings. So I'll repeat that. So this is price to sales, okay? EV to sales, the figures are there. EV to EBITDA also we can calculate. EV to EBIT also is very simple because the numbers are there. Price earning ratio is your market cap divided by earnings. Is that okay? Okay. Now, वही तो मैं बता रहा हूँ. I have just put them. The next would be to explain them. Okay. First of all, to understand whether these numbers are correct, go to market screener and go to this place. Okay. Look at the stock PE ratio. What is the stock PE ratio? 29.3. What is the number we are getting? How much number we are getting? इतना ही आ रहा. अच्छा, अब हम आगे चलते हैं. Price to sales. How much we are getting? So is the number okay? Are we getting the same number? EV to EBITDA 19.5. Are we getting the same number? Almost the same number or same number? Same number. Okay, let's see. Enterprise to sales 6.24. EV to sales. Are we getting the same number? These numbers are given by the site. Okay, we have just calculated offhand ourselves and the numbers are matching, isn't it? ये number match करके? All numbers except one number was not there. Rest of the numbers we have calculated there. Okay, now let's go and see what this means actually. So now, we want to know which company is cheaper, which company is expensive, which company is cheaper. We are trying to value the company and finding at what valuations they are trading in the market. Now there are two techniques of valuing the company. There are two techniques in the world. Of course, there are many more also, but two are very popular. One is called the DCF method, okay, discounted cash flow technique, where we calculate the intrinsic value of a company. What is the real value of the company? By projecting, its in next few years, how much, companies is going to earn, okay? And we discount all those earnings and calculate the value of the company, okay? Have you done DCF ever? So, no problem. So, we will be talking about that later. So, there are two methods, okay, through which we calculate the value of the company. The first method is called the DCF, discounted cash flow technique, okay, or people call it popularly as intrinsic valuation method, okay. Now it's very simple, just to understand. Suppose you want to value any asset of the company or any, sorry, no, we have to, value a company or any asset in the world. Suppose you own a building, for example. You own a building, okay. It is giving you a rent of say 10 lakh rupees per annum, or 12 lakh or 10 lakh, whatever. Okay. Now, as long as you hold the building, you're going to get 10 lakhs, and it may even grow also. After 2 years, 3 years, a 5%, 10% increase will happen. As because the real estate, if you own a building, you will get some kind of an appreciation in terms of rentals also. Okay, whenever you give it on rent, next time, or you may have a clause in your rent agreement that there will be increase of rent by say 10% after 3 years. So you are going to get, the rent is also going to go up. Okay, think about the company; they are also earning money, and the profit is also growing. Okay, now if you own that asset and the value, the rent is going up, so this is the money what you are getting. Now suppose I come to you and I say I want to buy this building. Can you sell the building to me? He says I'm getting say 10 lakh rupees per rent per annum. If you buy the building, I'll lose that. I say, okay, I'll give you some money which you can get 10 lakh rupees as, interest or some other form of, earning. Okay. So is it okay? Suppose I give you say 100 crores of rupees for buying this building. Okay. And if you, talk about 10% of that, sorry, I give you say 10 crores. So if you talk about 10%, it becomes 10 lakh, isn't it? So you say, okay, I can sell it for 10 crores because I can keep it in a bank deposit or somewhere I can earn 10%. So it will be equivalent to my holding this building. Whether I hold this building or I take 10 crores from you, I put it in my bank account, I earn the same thing, isn't it? So I arrived the valuation of the building of 10 crore. How? Because this is called the DCF method, through which we calculate the value of the building by looking at what it is going to earn. So what I did was, whatever earnings the building is going to earn, I discounted them by using a 10% discount rate and arrived at a figure of 10 crores. Have you calculated the present value? कराया ना आपने टाइम में? तो मैंने क्या करा, मैंने बोला इसको 10 लाख मिलता रहेगा, कब तक? जिंदगी भर। तो मेरे पास कोई फॉर्मूला होना चाहिए जिससे कि मैं वो पूरे 10 लाख की प्रेजेंट वैल्यू निकाल दूं आज की डेट में। तो वो आ गई 10 करोड़। आई एम नॉट गोइंग टू द कैलकुलेशन, बट थिंक दैट आई हैव अ मैकेनिज्म टू कैलकुलेट द प्रेजेंट वैल्यू of whatever you're going to earn. I'm going to give you right now, because you can put it 10% and I have used the discount rate of 10%. Suppose that was the, kind of of course, discount rate can change, but we are not going to discuss that at the moment. But 10% is the discount rate at which I valued the asset, the building, and I came with a value of 10 crores. Okay, and you are happy because you have a way to calculate to get 10% return. Suppose आपके पास कोई ऐसा इंस्ट्रूमेंट है जिसपे आपको 10% रिटर्न मिल जाएगी, तो आप बोलोगे भी ठीक है, अगर आपको 7% मिलती है, 8% मिलती है, तो यू में डिमांड मोर कि भाई मुझे 125 करोड़ रुपए दे दो क्योंकि मेरी रिटर्न तो सिर्फ 8% आएगी. So you will get a value based on at what rate you are discounting. Okay, so that is called the DCF. Now in the companies, how we do it? We first calculate how much profit the company is going to generate over the lifetime of the company. Okay, fine, and we convert that into cash. क्योंकि profit जो होता है, that is an accrual concept. Okay, if I say the company has earned 1 crore of profit, but cash may be either 190 lakhs or maybe 110 crores. So that means the cash will differ from the profit because profit is an accrual number. So we convert that profit into cash, and then I discount that cash using the cost of capital of the company and arrive at the value of the company. That is called the intrinsic value of the company. And then I divide by number of shares of the company. I'll get the per value of the share. जो उसकी वैल्यू आएगी कंपनी की, ओके, कितना वो पैसा कमाएगी, उसको मैं डिस्काउंट कर लूं एट द कॉस्ट ऑफ कैपिटल, then I'll have the value of the company. What I'll do, I'll divide by the total number of shares the company has issued. So per share मेरी value आ जाएगी. Okay, of course this looks very simple, but that is the way it is done. Okay, and this is called the intrinsic valuation mechanism. Okay, now it involves a lot of calculations. I have explained in a very simple manner, but it involves calculation of profits of the company for next 10 years. Any person can differ. If I have to calculate how much the company is going to earn, there is another gentleman who will just do the same calculation, he'll arrive at this different number. Okay, if I say that the discount rate should be 12%, he may say the discount rate should be 15%. So there's a lot of calculations and a lot of assumptions we are making. And when we talk about company, we say what kind of products they are selling, and how profitable they are, how the sales will grow, how the cost will grow. Then only we'll come to the profit of the company. No? It's not easy to calculate the profit of the company unless we have all the information with us. Okay, and if the same thing is done by the company itself, by two people in the company, they'll come with different calculations with regard to how much profit the company is going to earn. So it's a very, very, exercise which involves a lot of detailing, a lot of assumptions, and 5 different people will come up with different calculations, and they will all throw up different value per share of a company. Okay, fine. So, but this is the most scientific method of calculating the value of the company. But there is a very quick method of doing the same thing, that is called relative valuation. So the second technique is called relative valuation or comparable asset pricing mechanism method, where we compare the two companies. Okay, and it is called the relative valuation. Okay, here we look at all these ratios which we are calculating. Fine. For example, I'll say that, for example, let's just think about just the P ratio. Suppose this company is trading at what? 29 P ratio. Which is this company? Automobile company. Okay. Now we'll calculate the P ratio for all the companies in auto sector. Then we'll calculate the average of it. Suppose the average comes to 25. So on an average, all the auto companies in India trade at a P multiple of 25. Okay. Suppose if I own a company which is also automobile and it is not listed in the stock exchange. Okay, fine. So I have to calculate what should be the value. Suppose I want to sell this company to someone. Okay, so what price I should get it? So what will I do? If suppose my company's P ratio is how much? 25 average. Okay, suppose my company is earning 10 rupees earning per share. Earning per share of my company, which I am running my company, is 10. So I will take 10 multiplied by 25. So my share price should be 250. Got it? समझ में आया आपको? कैसे निकाला मैंने? पी रेशियो लिया और जो मैं प्रॉफिट कमा रहा हूं उसको मैंने उससे मल्टीप्लाई कर दिया, तो मेरी कंपनी की वैल्यू आ गई. तो मेरी कंपनी की पर शेयर वैल्यू 250 रुपए होनी चाहिए. जैसे मैंने आपको रियल एस्टेट का एग्जांपल दिया था लास्ट टाइम, इफ यू रिमेंबर, वेयर वी कैलकुलेटेड द per square feet value of a flat and then multiplied by the square feet of the next flat and calculated the value of the flat. So similarly, it's a multiple base kind of mechanism through which I calculate the value of a share. Okay, because the P ratio is what? P ratio, what is the formula of P ratio? What is the formula of P ratio? Market price per share divided by EPS. Suppose it is 25 for the whole of the industry. पूरा इंडस्ट्री का 25 है, किसी का 29 है, किसी का 20 है, किसी का 27 है, एवरेज जो आ रहा है 25 है. So all automobile company in India takes round about at 25 P money. Okay. Now, if I know this, I can calculate the value below. Suppose I say this is 10. So I put this as 10. Now P ratio is this, so now I can just multiply and calculate the value, which will be EPS multiplied by P ratio, which will be nothing but the market price per share. So market price per share will be EPS multiplied by the P ratio. Okay. So this EPS यहाँ आ जाएगा और P ratio इधर आ जाएगा और MPS यहाँ आ जाएगा, बाहर आ जाएगा. Okay. So here I have 10 multiplied by 25, 250. MPS divided by EPS. Is that okay? Fine. So whenever we are trying to value a company, normally a company which is not listed on the stock exchange, we may use this mechanism of the relative valuation. भाई अगर सारी ऑटोमोबाइल कंपनी 25 के पी रेशो पे ट्रेड कर रही है, 25 टाइम्स दैट इट्स ईपीएस ट्रेड कर रही है, ओके, तो इसका मतलब मेरी जो कंपनी 10 रुपए कमाती है उसकी वैल्यू 250 रुपए पर शेयर. Now the same thing came when I was telling about we were trying to value a company. I was a case. I was working with Hero company, Hero Group. So we owned a company which was into some kind of a business, okay, and we wanted to sell that company. Shareholders were also, on the Munjalas. Even Bill Clinton was the shareholder of our company, and some foreign shareholders were there. And the Munjala owners of they were the shareholders. So we were trying to sell that company. Okay. So we have used DCF technique. Okay. And we came at a valuation of 500 crores. हमने बोला कि 500 करोड़ का नहीं है. So there are people and they were this was similar to the bank. So they came down from USA and they wanted to buy our company. Rather, they wanted to invest some 30%, 20%. So, but we are interested in to sell that company. So they saw our calculations. They said कि आपकी 500 करोड़ की कंपनी आपकी valuation के हिसाब से. But we are not convinced with that because when somebody buys an asset, he will negotiate with you. 500 crores is not 500 crores, 300 crores. They have a basis for that. So they looked at all the numbers, and in the evening they went back to their hotel. Next day morning they came and they asked the company in India. There was no similar. We did on the stock exchange. We have found there is one company in Argentina with a similar business to what you are doing in India, and their P ratio is 15, and you are earning 5 rupees EPS. So yours should be 75 rupees should be the price per share. Multiplied by the number of shares you have issued, they came up with a valuation of 150 crores of the company. They said आपकी कंपनी सिर्फ 150 करोड़ की है. तो अर्जेंटीना में कंपनी है, उसकी पी रेशो 15 है. वही कंपनी पूरे वर्ल्ड में जो ट्रेड करती है इन सेम बिजनेस और कोई कंपनी ही नहीं है. तो अगर वो 15 गुना ज्यादा ट्रेड करती है अपने प्रॉफिट से, तो आपका भी वही होना चाहिए. आप अगर 5 रुपए कमा रहे हो ईपीएस, तो आपकी कंपनी का शेयर भी तो 75 रुपए होना चाहिए. Okay, multiplying the total number of shares you have bought, that should be your value. So they came with a valuation of 150 crores, and we were saying 500 crores. But then we negotiated and we brought it to about 180 crores. One deal. Is that okay? Fine. अब deal नहीं हुई थी, मैं आपको बता रहा हूँ, तो deal खत्म हो गई. Before that I resigned as CFO of the company, and the deal went off. Of course, I resigned, but I was re-elected as CEO of the company, and they told me to stay till the deal is finalized. But otherwise, going flat through because if the CEO of the company resigned, there's something hacking. So they retained me. I got my salary for full 1 year sitting at home. I was earning about that time 7 to 8 lakh rupees per month for Full 1 year, I got the salary sitting at my home. Fine. Is that okay? Anji? Yeah. No, that's a very good question. We have two techniques, DCF method and the relative valuation method. Are they going to be same? No. The first method is more accurate method to calculate the real price of the asset. The second method is based on the current scenario. So what happens? Today the market is, sometimes people are very optimistic, sometimes people are very pessimistic about the future. Okay, the market price which is prevailing of the stock price which is prevailing, the market reflects that sentiments of people. So either the market is overpriced or underpriced. It is never fairly priced. It is never trades at its real value or the intrinsic value. अपनी intrinsic value में कभी भी share price trade नहीं करता. Either it is oversubscribed, overpriced or underpriced. If it is overpriced, is we want to know whether market. Right? So the markets make mistakes. Markets are never rightly priced. Sometimes there is an optimism that India is going to grow, and beat the whole of the world, and the share prices, barring 1 month, the share prices up, and the market went up about 30 to 40%. Have to find excuses. There is the Israel-Hamas war. Okay. That is the only excuse of share prices, and at least there will be some kind of a balance. कभी-कभी share price इतना बढ़ जाता है, okay, and people all ignore all the bad news. But when they think that share price looking for some excuse. अब इजराइल और हमास से हमें को फर्क न पड़ रहा हो, but share market को फर्क पड़ रहा है. Suppose assuming though it affects the market, but suppose Israel Hamas war is only a local war, it is not going to affect India as such. Okay, really just 8% को touch हो जाएगा हमारे इंडिया में. तो हमारे इंडिया की शेयर मार्केट भी गिरनी चाहिए, but share market will drop. Okay, because it has actually run very hard in the last 6 months. Now it is going to take a breather. It will correct a bit. Okay, by 5 to 10%, the market is going to go down. And people will realize now the market has become still cheap again. Let's buy now. Because the future of India remains intact. India is going to do well. The story has not gone away. The story is staying. But the story led to increase in the prices so much, the share prices went up. So either the market is overpriced, or when the market starts falling, then it falls like 9 pins. Okay, it falls about 20%, something falls like that. Then people realize that it become very cheap. It's very cheap and the future is very good. So the pessimistic people have brought the market down to a very low level. Then the market will resume its journey again. So market will be either overpriced or underpriced. Have you got it? So जो relative valuation है वो यही बताता है, because this is actually gauging the current market trend. तो हम तो current price दे रहे हैं, current market cap दे रहे हैं, उसके हिसाब से valuation निकाल रहे हैं ना. And I am saying that all these are either overpriced or underpriced. So you use the same parameter to value a company. So it is called pricing mechanism and not valuation mechanism. जो valuation mechanism होता है, that is only the DCF technique. And because the DCF technique involves a lot of calculations, a lot of sitting with the top man, how the MD, CEO, marketing, what is the industry outlook, how the company is going to grow, what will be the earning of the company in the next 2 years, what is the future, what is the cost of capital we are going to use as a discount rate. So it involves a lot of calculations. ऑफर करने के लिए हम क्या करते हैं, relative valuation का करते हैं, has a limitations. Okay, so then we correct ourselves. Say, hey, what should be the rate should prevail all the time? So can we use that instead of the current PE become very high? आज की डेट में बढ़ गया, शेयर प्राइस बहुत बढ़ गया, तो हम उसको थोड़ा टेम्पर डाउन कर देते हैं. So we can always use even the relative valuation method and make some controls for them and come up with a real value. तो ये आ गया. Is that clear? आपको क्वेश्चन देता हूँ. So there are two mechanisms. One is called the relative valuation. It is only a price mechanism. It's called price mechanism. it's not a valuation technique. Some people disregard this as a valuation technique. They say it's just you are valuing something based on the current value. आज अगर कोई चीज बहुत महंगी मिल रही है तो हर चीज महंगी मिलेगी ना. अगर आज सपोज टमाटर 200 रुपए किलो है, फिर पिछले महीने में हर जगह 200 रुपए हो रहा है. उसकी रियल वैल्यू 200 थोड़ी थी. वो तो उसका 3 है, 200 के वापस आगे 20 रुपए में 15 रुपए में आगे. तो रियल वैल्यू तो उसकी 15-20 रुपए ही है ना. तो कभी कभी मार्केट 200 तक पहुंच जाएगी, तब आप खरीदोगे तो महंगे खरीदोगे. ओके, सो it's overpriced. The matter was overpriced about 6 months back. And now at 20 rupees, they will be underpriced or maybe fairly priced. Who knows? Fine. तो हमने क्या करना है, हम अब देखते हैं ये मैकेनिज्म. अब नाउ अब इसका मतलब रिलेटिव वैल्यूएशन है. अब रिलेटिव वैल्यूएशन जो है कई टेक्निक्स है उसकी. एक तो पी रेशियो है जो मैंने करके दिखाई थी आपको. ओके, बट दैट इज नॉट सो सैंक्रो से. So we should check the same two different techniques. Again, relative valuation is calculated by using various techniques. People say that P ratio involves two things: market price per share, which is okay, which is the numerator is the market price per share, and denominator is what the profit of the company. The profits of the company are the bottom line of the company. The bottom lines can always be manipulated, okay, and can have an effect on the leverage also. I told you because of the leverage, the profit can be boosted. The company is taken on debt, 10%, so you will pay 5%. So the net profit of the company can be managed. Two accountants come with a different kind of net profit of the company using different accounting principles and everything, and then it has an impact of leverage. The more debt you use, the bottom line. Because debt is going to cost you cheaper. Okay. Whatever money you have earned on the debt, that will get passed on to the shareholders by way of earning per share. In good times, in bad times, it may actually play a reverse. Okay. So the P ratio is not an ultimate ratio through which can be used and justified for running your company. Okay. So can we have another method? Somebody said better have it cannot be manipulated. So take the sales price to sales, not divided by sales. So it came as how much it came as 6.28. So we can use that. But always remember the numerator and the denominator should be consistent. But are they consistent in price to sales? No. Because the price is what? The market cap. And sales is what? Sales is coming by all the assets of the company. Isn't it? सारे assets से जो sale हो रही है वो दे रहे हैं और price है share price दे रहे हैं. तो इससे better क्या होगी? EV to sales is a better ratio because EV means all the operating assets of the company. You take all the sales. So that this numerator and denominator looks to be more appropriate and this looks to be inappropriate, isn't it? अगर हम दोनों में numerator and denominator देखें हैं, क्या they reflect the same thing? EV all the assets of the company. वो सारे assets से तो आपने sale करी है, तो उसकी sale इतनी है तो this ratio is more better. Now there are certain companies where price to sales look to be very good. Okay, there are certain companies because of its own conditions, the price to sales is an appropriate ratio. Where suppose, where we are taking what EV. Now suppose think the company is using only equity shares. They don't have any debt. Then price to sales will be also because EV and market cap will be same. Fine. In what circumstances, if a company is not using equity debt at all, then price to sales is also a good ratio because they both reflect the same. I mean, this thing, numerator and denominator are, consistent with each other. Is that okay? Have you got it? अच्छा, अब पहले हम कर लेते हैं, फिर चलेंगे. Similarly, do for Maruti Suzuki. Do for all, okay? अब आप कीजिए ये. मेरे पास तो रेडीमेड कुक स्टोरी है. I'll just be on that. I'll just open that. First, put all the data and just keep checking your data with my data. Okay, the numbers may change because I put the number in the morning before the market opened, and the market is open, so the numbers might have the market cap and all. Yeah. भाई ऐसा है, आपने क्वेश्चन पूछना है, कैलकुलेशन पर क्वेश्चन पूछना है, एक कंसेप्ट पूछना था, मैंने को चेक तो ये है, ये कंपनी करोगे फिर आप, तो नेक्स्ट डोंट जंप टू द सेकंड एंड पहले इसको पूछ लो, पहले उसको कर लो, जंप ऑफ, इट्स गुड दैट यू आर डूइंग इट, अल्टीमेटली आपने वही करना है, बट अभी पहले इसको करो, तब समझो कैसे क्या आप आगे बढ़ जाओगे, मैं पीछे रह जाऊंगा, मेरे साथ साथ चलो। इसको मैं जरा थोड़ा सा पॉज दे दूं।